Yeah, we're good.
The countdown. Hey everybody, how we doing? Welcome. I guess we can call it Sharpen Your Trading Skills episode. We are doing a trading interview with Nick Drendel here. Welcome Nick. Well, I'll let him get into it. He works for Trader Lion and Deep View. To Obviously you guys all know the Trader Lion videos and the work that Richard Moglen and Nick Schmidt do. Just absolutely phenomenal. And the deep view scanner is amazing. You've seen ManRav post a bunch of charts with it and information from it for myself as well. I'll be a TC 2000 guy for life, but doesn't mean that some extra products aren't on the table. Anywho, welcome Nick. Thanks for coming on. First, if you just want to talk about kind of, your background, how you got into trading, what you like to do. Yeah.
Sure. First off, thanks for having me on. This is my first interview, so this should be a fun one. Any questions along the way? If I'm not making sense, is there a way to see the questions? Oh yeah, if I open up
I
chat.
I'll read them out as they come through.
Okay,
And like I said, I'll send you an invite to the Discord after this.
cool. Yeah, so my name's Nick Drendel. I guess I would say I made my first trade in about 2014 when Robinhood came out. I graduated college in 2016 with a background in actuarial science and finance majors. And like anyone, when they first start trading, they do the dumbest things. And I did the dumbest things for far too long. I worked as an actuary for an insurance company for 5 years after college. And that kind I wouldn't say that set up my trading, but as actuaries, like our number one thing is risk management, risk management, risk management. So that piece translated over well. And then earning a little bit more money allowed me to take some risks. After 5 years, I quit, went full time trading, and the plan was full time trading and content creation because in 2019, at the end of that year, I started a YouTube channel, and I was like, my first video was so embarrassing, but it's actually a fun one to look back on. I just start off saying, I am the worst trader out there. I make all of these mistakes. So I'm going to start filming these videos, these daily recaps or weekly recaps, and I'm just going to learn along the way. But my thought was if I publicly post what I'm doing, I'm going to be embarrassed if I keep making the same mistakes over and over again. So I'll probably get a little bit better. Um, and that was real. Honestly, it was the changing point in my trading because I tried to trade options. I tried to buy penny stocks. I did everything that new traders try to do, but I did it for way too long. So starting off that YouTube channel was actually the best thing for me because I got a lot of help in the comments saying what I was doing wrong, and that's how I started to kind of run into Richard Moglen's videos, learned about Mark Minervini. He was like that. His book was the first one that I bought, and then learning the CanSlim process and stuff like that. I wouldn't say that I'm strictly a CanSlim trader anymore, but I think that's a great foundation to go off of. You want stocks that are going up, that are in uptrends, that institutions want. I think that's the probably the easiest way to make consistent money without oversized risk, anything like that. Um, so in 2020, that was a great year for the market. Not a great year for me. I was still early in my trading. I think I was probably up maybe 25 or 30% that year. But it was 25%. But then it was obvious what could be in the market. I saw what Oliver Kell did. I saw what Leif Sereda did the year before, and I joined Leif's champion team trading at the end of 2020. And working with him, kind of as my first mentor, that was a great, great way to get into more of the high tide flag, a little bit quicker
Yeah.
trading.
Yeah. What was that like in his group? That's awesome. Obviously, big fan. Have watched probably every interview he's done. Yeah. What was his group like? And I know he's the high type flag, like
Yeah, you have to
connoisseur.
brand yourself some way, right?
Yep.
In the markets.
And is that all he trades and all he talks about and all the stuff he posts?
No, no, no. He trades a bunch of other things. High tide flags is like it's the most powerful setup in the market. I truly believe that, and he trades them probably better than anyone else that I know. So it was great to learn that piece, but not every market is a high tide flag type market. Right now, we are in that. We have APP, PLTR, a bunch of the quantum stocks that
Yep.
potentially can flag out here and make some high tide flags. But for the most part, when I joined, I think it was like towards the end of 2020. So we were getting a little past that euphoric
Mm.
point. A lot of it was more like what he calls rocket bases, where stock has run up, but instead of doing a 3 week flag, it'll go into a pullback of like about 35% and then continue on from there. So he was trading much like any other kind of like swing trader. But what he did really well, and what I still struggle with, is he held on to his winners till they gave them a reason to sell at all. So he was taking larger size positions and holding into 40, 50, 60% moves when I still have the problem of selling too early. And that's something that I'm trying to work on in 2025. But it was a really great program. The entries, and he shares his entries, his stops, all that stuff, which when I first started trading, that was probably the most helpful just because I could look on the chart, see like where is Leif buying, where is he placing his stop, how is he managing his risk. So that was really great. But then he also does weekly live streams and then like how to put together a watch list, all that stuff. So that really accelerated my learning curve. I know there's always like a bad, I don't know what to call it, but like, oh, you have a course, oh, you have a chat, like you have to be a scammer. That's absolutely not true. Like if you're signed up with the right people,
Yeah.
you're accelerating your learning, and that's going to pay way more than what you're paying as long as you're putting in the work and not just like following alerts. If it's just an alert system, you can still learn like, okay, here's their entry, here's their stop, but you don't want to be dependent on someone else in trading. Like you always want to be learning from other people, but then taking full ownership of that. And that's kind of what this year has been for me, like full ownership of my own system. And so far this year has been the best year for me.
Yeah. This year's been amazing. I mean, even 2023 as well. Started off a little slow in 2023, and then since then, there was a big there was it August to October pullback
Mm-hmm.
in 2023, and pretty much since then, it's kind of been like a blur. It's been a year. But I mean, it's been
Yeah.
since that pullback, it's been pretty amazing, pretty favorable trading environment. I had a pretty similar experience. I joined in a group, Bulls on Wall Street, with Kunal Desai, and
Mm-hmm.
same thing. Just was watching his setups, watching his entries, learning how he, the process of things, and then eventually you just kind of take that information and then develop it into your own system, and then that's when that learning curve. You're right. You go from 1 to 10, and then you go from 10 to 60, and then that 60 to
Yep.
80 to 90. That's the grind, man. Is that last part?
And we're
And
always working towards that 99, but
yep.
there's always more things to improve on, like
I
regardless
hear
of where
I
you are
hear
in
I,
trading.
I hear Minervini is still working from 98 to 99. They say after 40
You
years.
bet he is. He's not someone to stop working.
Man, awesome. So, hey, what, like this year, what were, or even recently, what are some like the more, not necessarily memorable trades, but most like impactful trades that either you'll remember 10 years from now or you want to forget 10 years from now? Like,
Yeah, so I'll share my screen and walk through a couple. I think like so my main system is more of a pullback buy strategy. And this is something that I developed kind of towards the end of last year, and then really like it became my main entry tactic going forward. And that all started because last year, 2023, I actually had a really rough year. I finished down 5% or so, but I got hit with the CRDO. So that's a stock that um, I will never forget because I was pretty large positioned into this. It was the leader at the time, one of the few stocks acting well. and then a gap down like 50% on this day, Valentine's Day. I remember telling my girlfriend at the time, like, I can't believe how much money I just lost because I was like 35 or 40% into this stock. And then the rest of the year is kind of all like me taking a step back and mentally more so taking ownership of the style that I wanted to trade and get into. So one thing that I did at the beginning or at the end of last year was I watched Oliver Kell's Swing Trader Masterclass again. And I kept noticing that he would talk about these unfilled gaps as like areas of interest that you wanted to always mark down on your chart. And then I was listening to a Stan Weinstein interview and he talked about unfilled gaps. So I started going through all the previous leaders of the past 5 years and drawing unfilled gaps every single day, and basically practice trading like the market leaders of different cycles. And I really think like even if you hear this presentation, think unfilled gaps are nothing to focus on, completely fine. Like all about ownership that you take. But I do think the practice of going back and looking at the market leaders of past cycles and studying that price action is the best thing that you can do for your trading. So I did that and started noticing that, hey, for the individual stocks, when you pull into an unfilled gap zone, a lot of the lows of the pullbacks correlated with these unfilled gaps. So the first stock that I traded this year that had an unfilled gap was SMCI, and it goes back into like the canceling principles. Like it's a leading stock in a leading group. It had ran, I don't know, from $5 to, well, unadjusted $5 to 38. And then it had this awesome base where it took a very long time to consolidate, but it never broke down. Like it consolidated. I think this was only 35% from high to low. Yeah, 36%. And studying the leaders of 2022 was AMR, which was a stock that did very similar thing. Had a run from like $13 to 170, and instead of breaking down, it just consolidated for months. And instead of consolidating kind of a stage three top into a stage four downtrend, it consolidated, started putting in a higher low, and then ripped from 160 to 400. So over 100% move. And I used that completely different industry, but I use that as, hey, stocks that don't break down and actually base after a really extended run are stocks that you want to be taking a close eye on. So with SMCI, I had redrawn this gap now because we're well below it. But you notice this unfilled gap after you put in a higher low in the base. So people were trying to buy this because it was such a big winner the previous year. People were trying to buy it all throughout the space. But once you got the first like higher low in the pullback, that's when I started to take note of it. I didn't buy it up here, but I did draw this gap. And then we pulled in, and everyone was like, SMCI sucks. This isn't a stock that we should focus on because it had been dead money for a couple months now. But if you see, if I zoom in here, it correlated so well with this pullback and the 50-day moving average that I bought this a couple of different times thinking it would like get up and go, but it was really the third day where we opened, we shook out the low by like just a couple cents, and then we reclaimed that low and reclaimed the high of the support gap. Whenever I have an unfilled gap that gets tested with intraday price action, I call that a support gap. But once we reclaimed the high, I sized this up like pretty good, like 35, 40%. And the best stocks, you'll hear a lot of traders say the best stocks work immediately. And this one did work immediately. It had, I want to say this was like a 25% move. Yeah,
So
26% move in 3 days right there.
yeah, I
With
mean
a,
that's just immediate feedback that what you're seeing at that gap support is just exactly what you want to see. The stock's reacting, other traders are seeing that, and it goes up immediately. What I want to ask, when you say 35 to 40%, You mean of your account, right? As a
Yeah,
35% position size. And of that, one thing we always talk about is because all takes, sizes big like that as well. Is obviously you're not risking fully 40% of your account. You have a stop loss.
correct.
If your stop is, let's just say, 1%, which, is a type stop loss, then 1% of 40% of your account would be
Point
a
four.
0.4% loss on your account, 0.4% loss on capital. So, when you see setups like that are supported at the gap and you're able to risk 1%, you
Yep.
really are able to size into them really effectively. And even that, you're even able to have a small win rate even and still be
Tiny.
profitable. Like,
Yeah. So with these types of setups, and the reason why I almost exclusively trade these gap setups is because you can keep your stops so tight. I'm trying to buy the stocks that everyone wants, but at the price that everyone gives up at. So like as soon as everyone's getting stopped out or everyone's ignoring the stock and it's aligning with a gap and ideally another key area, either a 50-day a key moving average, whatever that is in your mind, previous support, or sorry, previous resistance. If you like break out of a top, come back to that top, a whole number, a previous pullback. So, like I said, on this day, we actually shook out the low of the previous candle and then triggered, and immediately we had that traction on an uptick in volume. And when you're buying these pullbacks with such a tight stop, I think this was a 3% stop under the 50-day and under the gap low, you can size them up with typically like the max portfolio risk that I'll take is 1%. Like there's some instances where it gets to 2%, but really like a majority of my trades are less than 0.5% portfolio risk.
yep.
And I would say trade risk, so like entry divided by stop is usually like 2% max. This one was 3% because we didn't undercut the gap zone. I kind of learned that a little bit later. So I'm glad I didn't learn that at this point. Otherwise, maybe I wouldn't have bought this. But we just came so close into the 50-day. It was a second higher low in a monthly base on a stock that had risen 300, 400% and then didn't collapse. So just like AMR the previous year, this was something that, okay, am I going to even remember this if I lost 1%? Probably not, but maybe I'll be remembering it and talking about it on an interview later if I do take this trade. So,
What you would remember too is if you decided not to take it or if you hesitated on that setup and then
right.
you watched it go 26%, pull back to the 20 MA, and then, we all know what is history. They raise guidance, right? Is you'd remember that setup that you decided not to take for whatever reason.
Exactly.
You also
Yeah,
you also
so
had Nvidia setting up at like that last contraction in that VCP base that same exact time as well to kind of go with that thesis.
yep. So whenever you can align like the leading stocks and the leading themes and then you find them at the spots where no one wants them, that's the best time to roll the dice. And I do, a lot of traders don't like to think of trading as gambling. Personally, like I do like to think of it that way because I'm taking a uncertain, or I'm putting it on a financial wager on an uncertain outcome and I'm just rolling the dice. And in my mind, if I think of it as gambling, then I know I can be wrong and I know I can lose money. So I always have to put in either stops or other ways to manage that risk, knowing that a loss is possible. So I know a lot of people like hate thinking about trading as gambling. I'm probably the only one that does it that way, but
That's a
this is something that I would roll the dice on like a
that's a
hundred times
good
out of a
line.
hundred.
That's a good line because what that includes is that it kind of includes that you've accepted the, like you said, uncertain outcome. You've accepted the risk that you're taking, and therefore if the risk ends up coming to fruition, if you end up with a 3% loss on the trade, then it is what it is. You've already accepted that when you take that. Actually, it's a good mindset to have, probably very healthy.
Yeah, appreciate that. And then the next best thing about these gap setups is you're buying when everyone else is selling, which means when it does start to work, and like I said, they don't all work. You can have a very low win rate and still be successful. But when they do work, you get this pop through the 10 and 20-day moving average. And then on this day, it's back on everyone's radar, and everyone's already buying this, pushing it up, and you're already sitting pretty with a heavy position size, already low risk. And then by this day, I mean, you can move your stop to even, you can move it up, and maybe even take a third off, whatever you want to do. But you've already managed your risk and had well over, I don't know. I mean, on this day, it was probably like a 12% move, 3% risk. That's already 4R. And I mean, you know what happened. Unfortunately, I didn't ride this all the way up, but um,
So I was actually going to ask about that is so we had that 26% move, and then after that we had, what is that, 4 days of retracement,
yep.
sorry, 6 days technically. That sixth day is a nasty candle. It's a bearish engulfing candle, but didn't break the previous day low, that hammer candle at the 20, which I think
Hmm.
that's a 20, right?
Yes, 20. Yep.
And but it is a nasty candle. It gapped up, tried to rally where it probably should have rallied in a healthy stock probably should have rallied that day and
Hmm.
closed near the lows. Um, do you, I, do you wish you would have held that? By that I mean 10 times out of 10 on any other stock. Are you holding through that 6 days in your strategy, or do you desire to hold something like that?
So I did sell a third on this day, like, or I think it was, yeah, the next day, the first red day. I sold a third of that. So I already locked in 26 divided by 3, whatever that, 8R or so on the trade. And the beauty of buying low in the base here is when it's pulling back, you still have so much room to your cost that if it does fall apart, then it's a trade you don't ever talk about again. But like selling a third and locking in the profit, and then I also did have my stop loss like in the money at that point, so I wasn't too concerned. And the fact that it was one, two, three, and then potentially a fourth high or low in this base, I did just want to give the rest of it a little bit of room to run. And one thing that I noticed going back through all the historical greatest stocks is a lot of the times you'll see ugly closes either on the 20 day or even below the 20 day. Typically, like if you get your first close that's like right on the 20 day and your second close a little bit under, the best stocks in the market will gap up from that area. And when you gap up off of the 20-day moving average, everyone else that has sold these 2 days are going to have to buy it back. So it's always like it's a game of supply and demand really. And I always want to be a little bit early trying to get in and think of like the psychology of the traders who might have gotten in later. They're getting shaken out here. Now they're having to buy back, and they're buying back with, I mean, you saw this. I think this was the heaviest volume either ever or in the year. But at this point, you get a 36% move on, it would have been 20%. Actually, it probably would have been 30% of my account because it had that 20% move from there. But you get a 36% move on 30% of your account, and then you're good with that trade.
Big
So
day.
yeah, yeah, great day. And I held this up until the 31st, and then I went on my honeymoon. So I sold everything. Unfortunately, I sold everything. We went to Spain for a little over a week, and I was like, I don't want to worry about stocks. This is already such like a monster trade. I'm off to a great start this year. Let's just sell it. And then, of course, like I'm on my phone watching this happen. I'm just like, oh my gosh. Um, we got the first extension here, but one thing that I wanted to point out was my entry back into it. You see this unfilled gap from the 8th to the 9th.
Mhm.
And on this pullback, sharp volume, we undercut the low of the support gap. And that's my entry back into it. So I actually bought on the 20th as well. And so I did give up probably like a 20% move in here.
Mhm.
And I mean, I missed out on like a probably a 60 or 70% move uh, the days I was gone, but I didn't really miss out on like too much because I had another way to get back into the stock when everyone was panicking. Stock got extended. I had an area close to the 20-day moving average. Just a quick undercut that immediately responded. The gap down was not fun the next day, but I still had cushion because I bought it at 69, 70 or whatever it was unadjusted at that point. But then After it, we gap up again, and I can draw that gap. We pull back in, and I was still holding it, and then we eventually do top, and I didn't sell it until, well, I sold a little bit into strength, but sold probably half of it here, and then the rest on this day. And I didn't know that the stock was going to be topping here. It was a crazy move. Like it did get crazy extended. And we actually, scrolling over to the right, you see like later on, the pullback does find buying support again at the support gap, again at the support gap. And then eventually when you do break under that zone, you know the stock's probably in trouble. Like they've stopped supporting this area. So that was the first trade that really got me off to a good start to the year. And one that like I was prepared for because I had that AMR chart like studied, stuck in my head. I'd known SMCI. I traded SMCI the previous year and sold too early, obviously, because I always do that. But this was something that was on my radar. It was a leading theme, leading stock, right point to get in, right on the 50-day, right on the support gap, and it paid pretty well.
Why do you always sell early? Do you always have a honeymoon, or was it just the one time?
No, I just I don't know. It is like my biggest weakness in trading. My entries are so tight and I size them so large that I think I just have a mental barrier that I got to get around to like really up my returns. But the nice thing about these pullbacks is like you can size every single pullback like 30%, 40%, and the ones that work, like they'll boost your earning curve like pretty quickly. So if you look at like my earnings, like just account balance, it's pretty all over the place. But if you look at it on a principal basis, the largest pullbacks I've had are only like 2, 3% because you're always only risking like 1 or 2% on a trade.
That was a perfect trade review, and we're getting to know a good bit of what you look for. What are some other ones that you took this year? And then
Yeah,
yeah, I do want to dive into that selling early a little bit more later. Um,
sure. Yeah, that'll be painful for me. I need to feel that a little bit. We'll go to Nvidia. So this is a trade that I took about a week ago. Nvidia, the semis have not been a leading theme in the market for months now. Nvidia, while it's like the liquid leaders, I wouldn't really consider it that anymore. Everyone already knows Nvidia. Everyone's already made a ton of money. Institutions have already piled into this name. But whenever you get the first test of a key moving average, whether it be the 20-day or the 50-day, those are kind of like my two key ones to watch. And it lines up with an unfilled gap undercut. I just have to buy those. Like it's in my rules that I have to buy it, even if I don't think it might not be like an A plus stock. Maybe I'll buy it with fewer shares, or I'll look to sell a little bit earlier, which I did with Nvidia here. But we get a false breakout on the 21st. We drop through the 5, 10, 20 EMAs. We extend down. We have this little inside candle, and then we have another gap down under the 50. Everyone gets scared out, and we undercut the support gap low and reclaim it. That's my buy point at 132.68, and then my stop is just below wherever the low was. So I had about a 1% stop on this. And what you want to see after these support gaps get tested are continued gap ups. So the next day you get this gap up, which is great to see because everyone's shaken out. Now everyone's trying to buy back in. And if you don't see that, if you see like a gap down, it's less likely to work. But this one was nice. We had a gap up, consolidated for a day, and then gap up, wedge pop through the 10 and 20. And then I sold half on this day and then sold half on the 6th. Because like I said, I don't think NVIDIA has as much juice as it had, obviously, in this massive run up. And it's a pretty crowded name. I was just finding my spot that everyone else is giving up on, saying, okay, here's when NVIDIA breaks down, and got long, probably made like 8% on the trade. But I was able to take 25% position size I only had a 1% trade risk, so that was only a 0.25% portfolio risk on the trade. So that just a nice boost to the equity curve there. And now that it's gapped down, I actually shorted this yesterday, not with full size because we didn't uppercut the resistance gap high, but we rallied up into that area and had a lot of weakness on this. Today was obviously a little painful because we had a gap up, but still don't see it doing anything like too right. If you look at the other like Mag 7 stocks, Tesla's at high, Google's at high, Amazon high. Like there's a reason Nvidia's not making highs, and there's part of that is the semiconductor group is just not leading right now, and everyone already owns this stock. So if we do see any distribution, I mean today obviously it was great in the market, but if we see distribution continue, then this is a name that if people need to get out of, there's going to be a lot of people that are going to need to get out. So if it does break over like 143, I'm going to get stopped out for a loss. But I think to kind of balance my portfolio, I think it's a good risk reward there.
When you're trading these, you're just trading shares?
Yep.
Perfect.
Yeah. Yeah. And then up until late September, I only traded my retirement accounts. So it's nice because I don't think of the money as money that I can use because I would be hit with a penalty if I pull it out. So it's a little bit easier to just like trade with that freedom of, okay, this isn't going to make or break my life right now. But if I do get this right, and this year has been a really nice year, down the line, I'm going to have all these tax-free gains to live off of. So the downside is you can't short with certain stocks like Nvidia. There's NVDS. There's that like inverse leveraged ETFs that you can trade, which are nice. But
hey, so I have a question. And this kind of ties into maybe some of those sell rules. Is so this NVIDIA, I see the trade at the 50-day moving average and at that gap support, and then the rally I think is 3, 4 days, 5 days. What is like? How long do you typically hold a stock? Maybe not, this specific trade, but even SMCI trade, that was, potentially a, multi-month trade, do you want to hold them for 5 days? Do you hold things at all for weeks or months? And do you incorporate the weekly or monthly charts into your analysis?
yeah, so I do look at weekly and monthly, but more so to like look at the potential setup.
Mhm.
So when we go back to SMCI, there was a monthly base that could lead to like a monthly move higher. With this NVIDIA setup, I mean, this is a pretty sloppy, I mean, I don't even know what number stage base we're on here, but we're getting way up there. It's wide and loose. So instead of a stock that I was going to be sizing into and trying to hold for a much larger move, this was going to be a base hit or maybe a double, depending on how
Cash
you
flow
see this.
trading. I call those cash flow
Exactly.
trades. Yeah.
Yeah. Just ringing the register, making sure the equity curve's at highs, and then and then getting out when there's any issues. Because if you this is where I do struggle is like the conviction side to it. So going back to SMCI or going back to a number of my trades is I still have like a conviction issue. I think this will be solved with like more strategic sell rules, and it is getting better every single year. But I guess part of the downside to thinking it's gambling is sometimes you don't believe the story, don't believe in the market, don't believe in the theme and stuff like that. My mom would always say that the market's just gambling. Whenever you have profits, like make sure you take them. So not blaming my mom, but there is like the other side of the coin on that gambling ideology is I don't think stocks can go up forever. So I tend to sell too soon. But that's something I am going to be trying to work for in 2025 is if a stock is above the 5-day EMA and it's breaking out of a base, something like that, just hold on until it breaks the 5-day EMA because some of these trades, like with SMCI, it got me off to such a great start that, like, really, if you only took a handful of those types of trades each year and you manage them well, you would have a great year.
Hmm.
My trading is a little bit different because I like these kind of like cash flow trades, and I feel like I do get probably the one of the best like risk reward spots whenever the stock is trading. So I do tend to over trade, and I guess I wouldn't call it over trading. My style dictates that I trade a little bit more, but with the sell rules, that's something that I definitely need to work on. I think when a stock breaks the 5 day, that could be your sell signal, or at least like sell partials.
Hmm.
Depending on the market, I do have rules on buying stocks based on what the market's doing. Like if the market is below the 10 day, any entry that I use is only going to be a shakeout reversal. Like I won't buy any breakouts. I won't buy any bull flags, anything like that. And I'll look to move my stop to break even after 2R, which is something that I learned from Leif Sereda. He has the like a red, yellow, green light market environment. And when he was on red, when a stock got up to 1 or 2R, he would move his stop to break even or half his stop to break even. He would trim some about a third at 2R. So it's not like hard and fast rules that I have on that, but I do think like when the market's not perfect or if it is getting like extended like we are right now, I'm going to be much quicker to move my stops to break even, much quicker to just sell a third into strength to guarantee a higher low on my equity curve. Um, the thing that I need to hammer home is when we're above, like when we're just coming out of a correction, and I did this well earlier in September, when we're just coming out of a correction like this, you can be in the right names for a long time and to be patient. But now that we're, I don't know what percent we are now, but everyone's sharing their P&Ls on Twitter. Everyone's having a great time, and the market is great right now. But when everyone's doing that, then I tend to tighten things up.
Um, so in like, and you know, that's something that certainly it boggles me sometimes is that, listen, you know, I know how to manage my risk. I know how to not lose money also when we're in a yellow environment or when we're in a red light environment below the 10 9 EMA or below the 20 EMA especially, right? Um,
Mhm.
in those green light environments though, when you know we're fully trending, when Peloton's setting up and breaking out, which was a great setup. When you know nuclear stocks, when space stocks are breaking out, quantum computing is you, you should really we should really be holding those for as long as possible. We should be willing to ride IONQ up the 20 EMA for 3 months, for 4 months, and even some of the software names that are catching up for Lab, for example,
Mhm.
which is just a fantastic trade to have one pullback to the 20 MA. If you're in a green light environment and your sell rules are still below the 5 day moving average, you never be able to ride something like Lab for this 140% move that it's had. And so again, I'm talking to myself, I'm talking to people in the group, and I know that everybody is having specific sell rules for specific environments, based on broadly what stocks are doing and what the index are doing. I think can be very beneficial. Did you trade this A-Lab?
Yeah, so I bought a lab on this undercut of the 10-day EMA and the support gap here. Got in at like 97.60, probably like 65 or so. Um, and this has been one of the few stocks like it is trending above the 5 day. I'm trying my best not to sell any of it. It's acting well, and the thing is like if you're in a leading stock in a leading group and the market's good, that's probably when to use like the 5 day EMA hold or like once the 20 day comes back through your entry. That's when like Ray from Traderline that's what he uses as his stop after it comes through his entry point. So I'm trying to get better with that. But the nice thing is like, yeah, when you risk so little and can size so large at the spot that everyone is selling a lab at, when it does start to work, like you got big size in there, and you can. I don't know. I still tend to trim too early, but that's a bad habit for me. Don't listen to what I do on the selling right now.
Well, I'm trying to connect it somehow to the line that you used about buying stocks, which is someone that posted in the chat. They're like, "Oh, I really like that line." Is I want to be. Oh gosh, I'm gonna try to scroll up and find it.
I want to
Um,
buy the stocks that everyone wants at the place that everyone's selling.
yeah,
Yeah.
and that was a great line. So how can that be incorporated into some sell rules? Because if like sell, like for example, let's say a lab, let's say you bought post earnings on Friday 11:15 day right there, that little into that gap right there. I thought that was a
Yep.
great setup. Right at 85. It didn't quite come into the gap. I think the gap low was like 84.15 or something like that. The low of
Hmm.
the earnings day. It did gap up the next day and ran. And I thought for me that's a signal to buy again
Yep.
on A Lab the next day. Um, so where your second buy, or maybe it was your first buy on 11:27 into this gap
Hmm.
right there is, if you were in from that earnings gap, would you be selling that day on 11:27 in your since you like to sell? I like to sell early too, so I'm talking to myself.
Yeah.
You know what I mean?
Uh, no. So like on pullbacks, if there's a gap zone, I am not going to sell until like we close below that. So with these gaps, a lot of people will close them out with intraday action.
Yep.
What I do is I just change the color. So tan or gray color is for any like unfilled gap, always from close to the low or close to the high if it's a gap down. But then if intraday we come in and we close back above, where you'll see like in this one, this was actually like this was the gap, but we ate into it, like we closed into it. So I change the size and the color to show that hey, buyers came in and supported this action. So whenever there's a gap zone and we're pulling into that, I'm going to give the stock as much room to work with, or I'll be adding to it. So that's kind of like the other side of it is like if I do sell early, I'm not very worried because I'm going to be buying the stock back at places that probably not other people are going to be willing to buy it
Mhm.
at. And my whole thing is I'm trying to buy the leaders in the leading themes. So if that's always my goal and the market doesn't collapse, then you're going to be buying the best stocks at the place that everyone is selling. You get a couple inside days, now it gets back on everyone's radar, and you're already back in. So even though it's a bad habit of mine to sell early, I it's not detrimental. It is detrimental to my returns, but it's not wiping out my returns because I'm
Yep.
always willing to buy back at these zones, and I'm actually like excited to buy back,
Yep.
and probably with more size.
Have you trimmed any of that A Lab from that 11:27 buy?
Oops. Just a little bit, but I'm really trying to hold the rest
Okay.
of it because I think like an IPO stock breaking out, um, it is a semiconductor and that group's relatively weak, so that's my only concern about it. But if semis like come back and start working in the market, like this has a lot of room to run. So when we go back to talking about like weekly charts and potential of the trade, this isn't even remotely the same as like Nvidia, that like
Mhm.
single, double trade, whatever. This is a stock with a lot of potential coming out of an IPO base. And when you buy it right with such little risk, like I'm willing to let this work. And even like if we break out again and then pull back, have this 10-day EMA catch up to the 118 zone, I'll probably be adding there.
So I bought this on 10/4, Friday 10/4, on that first gap up at
Oh, beauty.
yeah, $50.60 So I've been stalking this. I saw this pulling back into the 20 May. Similar type of thing is, pull back to the 20, remount the 9 setup. And
And unfilled gap after an ugly close into the 20-day. Like
yeah,
that's what the best stocks do.
yeah, and at that time I was really trying to work on myself is so like Oliver Kell, for example, which we have Oliver coming on, I believe in the first week of the new year.
Awesome.
He's a dominant at, well, he's dominant in general, but he's great at buying gap ups. Is I've noticed that
Yeah.
he will buy gap up into strength, and like for example, today was a little bit challenging. I knew I didn't really want to buy that much. Obviously, I wish I did. But I suck at buying gap up and go where they break their opening range, on the 15-minute chart or whatever, and they continue to trend. And at that time, I was really kind of working on that, and still am. Yeah. Anyways, that's like I'm going to continue to use that as an example. So one more question is, this gave a number of opportunities to add. Is how frequently do you trim a third or trim half and then re-add back full at one of those gap supports setups?
Yeah, almost all the time.
Nice.
Like because I'm selling early, I'm looking to add back with size, especially if the market's worse than the individual stock, there's relative strength in that stock. Hopefully, there's relative strength in that industry. And when we do get that kind of final flush lower with the market, wherever that is, it could be like a 2-day pullback. But like whenever we get a little bit of fear in the market, and this has been perfect for 2024, right? There's every dip that's been bought, you've been rewarded. It's not going to always work like that. This strategy isn't going to be perfect in every year. But when you're only risking 0.5% of your portfolio on a stock that you think is a market leader, and the market is going to start to work again, or if it's already trending, you have to roll those dice like every single time. It's absolutely worth it. You can have a win rate of 25%, but if your average win is 8R, 5R, whatever it is, you're going to be profitable. Yeah.
Very, very rich. And Brocco, if there's anything that I'm forgetting and you want to highlight, go ahead.
I'm gonna ask one question at the end that I'm saving.
Okay. Is what this is more speculative and not necessarily systematic, but what do you think of the market right now? What prediction, or not predictions, but what speculations? What are some things that you're looking for into the end of the year and the first quarter of next year? And yeah. What do you think of what do you think about stocks?
Yeah, I love stocks. No. So before the end of the year, I don't think like the market's going to crash or anything like that. People just have to wait 3 weeks and hold on to their gains, and then they can delay their taxes for another year. So I don't see any reason for the market to collapse here. We are definitely getting extended short term. We're starting to see like the most speculative names really ripping higher. XYZ. We saw the quantum names like really get extended, and that's all great. Like if you're in those names, but if for some reason like you sold early, which I have, and you're trying to get back into it, you just have to be a little bit cautious. The best times to buy are when you're coming out of a correction, not when you're seeing all the P&L screenshots on Twitter. So for me, like this year has been so strong already. The last thing I want to do the last 3 weeks is screw it up by trying to overtrade some of these high flying names and squeeze out a couple more percent on the year. I do think we'll go through some type of basing in the beginning of next year. I try not to look like too far in advance because I'm very much like a price and volume guy. I'm not an expert on fundamentals like at all. I rarely look at them. It's nice like, oh, if you see a stock with accelerating earnings or sales, but like really it's price and volume to me. And what I do, I don't really like scan for stocks. The only scan that I run every single day is an up on volume scan to see if there's like any emerging themes in the market. And then I keep a list of about 100 names that I go through every single day, along with the 25 ETFs and the like five indexes that I have here, just like drawing these gaps every single day. And that will really tell you, like, objectively what's happening in the market. I keep like a little OneNote. I'll bring this over. I don't know if this will show. Can you see this OneNote?
Yep.
Okay. I haven't finished today's notes, but just going through this every single day, writing a quick blurb on like some indexes, some themes, and then like potential longs, potential shorts, stuff like that. It's a much better way for me to focus on the leading themes and the leading stocks and really get those at prices that people are panicking and selling at. Where when I was not profitable in like 2019 was I was running these scans that were perfect for like this setup, like, oh, ADR is getting tight now. It was an inside candle scan or something like that, where, hey, now I have 25 setups to look at, but they're 25 setups in C minus stocks in like a D group strength, something like that, where now I'm much more in tune with what institutions are doing in the market, which is basically the whole idea behind these gap zones is like, are institutions going to be supporting price action at prices that they might not have gotten a chance to buy at when we pull into them? And when you do that with the whatever five indexes, 25 ETFs, and 100 or so names on my watch list, when you do that every single day, you get a better feel of the market.
Yep.
And it forces you to be objective. Like, I can think everything's extended, but if we get an ugly close under the 5 day and then have a kicker candle where we gap up here, I need to finish my drawings for the day. But this isn't bearish. Like, this was a really strong close. Now, if we break below here and we start to falter at the 10 day, then yeah, things are getting a little choppy. But I think if you have your same routine every single day and it's a routine to follow the leaders and not just to look for setups, at least for me, that has made a world of difference because I don't think I would have taken half the trades that I would have taken this year if I wasn't doing that.
I wish I would have asked this one earlier, but when you say intraday, what's the lowest time frame you're looking at? Do you go down to 15-minute or 5-minute, or are you looking at the 30 and hourly?
I'll even have like a 1 minute up because I'm really trying, like with this A lab example. Let me bring this back. But I'm really like focusing on exactly the undercut of these gap zones. So you could have it as a 5 minute chart, 10 minute chart, whatever, but I'm really just focused like when you see an undercut, and ideally that undercut of the support gap, it should come on increased volume because the whole point of it is you want to see people finally throwing in the towel and selling. And then you also want to see institutions on the other side saying, perfect, I'm going to be buying as much as I can right here. So you want to see a spike in that sell bar and then when you recapture the zone. So I'll have a 1 minute chart up. I think you could do it with a 5 minute chart just fine. But the whole point of these entries is I want to be pretty leveraged into these names because I'm only risking 1% or 2%. And but it has to make sense on like the daily and weekly chart as well. But like when I'm actually going to execute the orders, like I'll have my alerts like at the top part of the gap zone and then at the like middle part. And then once that alert goes off on like a top type name like A lab, then I'm just like one chart open. I have the 1 minute open. And then once we recapture the low, that's my entry point.
Yep. Very nice. And there's a question in the chat. I'm starting to get to some of the questions that have popped up.
Sure.
Going back to that CRDO from 2023, we can make this one quick, but I think we're all in agreement that there was nothing you can do. That shit happens, right?
Yeah,
Yeah.
yeah.
And
It was
having
unfortunate that it happened with my largest size position on Valentine's Day, but that'll happen
it was
every once in a
Valentine's
while.
Day. Yeah, there's really no signs. I mean, the chart looked great. I mean, for example, to put it in context, that's like a lab doing that right now, like basically.
Yeah, which is
And
like it's possible. It's not like the largest stock. The reason why this dropped was like um, their their main customer de decreased their orders or something by like 50%, and everything freaked out. Thankfully, I got an alert like from I think it was Richard, who was like, why is this down after hours?" And I looked, and it was like down. I think I sold it like 12.25, and then of course it immediately did this and frustrated every swing trader out there. Now looking back on this, I think there's probably some gaps that I could draw and get back into the name, but at the time, I didn't start using these like this gap system until like later part of last year into like
Mhm.
October, November. Um, but yeah, this was a rough day.
who are
But your rough
sorry,
days are going to be like the best part of your journey. I blew up my first account with do you remember XIV? Did you trade
XI,
that?
XIV? Is that's not the VIX? Which one is XIV?
It's delisted now. But in 2018, it was just going straight up. There was like no volatility in the market. And me and a couple people that I worked with, we were
Yeah,
like
the
all
VIX.
in. Yeah. It was an inverse like VIX,
Yeah.
basically. And volatility was just flat. This stock or this ETF, whatever, went from $6 to like $130, just in a like clean line. So me being dumb, I was like all in it. My friends were all in it, and then it dropped from like 130 to $5 the
Mhm.
overnight, and I just completely lost my entire account. But then that taught me a lesson not to go 100% in. And thankfully, like I learned that on here, I was only like 35%. Otherwise, this might have been 100% and then minus 50% drop, which would be even worse.
And then who is the crew that you run with? Like who you sent you message you said Richard like texted you. Who are the people that you talk to about stocks? Like Brock will randomly call he'll call me in the morning at 6:30 when I'm dropping off the kids or whatever and start talking to me about SMCI, MSTR, analog charts. Who are the people that you talk to?
You made me sound like a psycho.
I mean, yeah.
We all kind of are. Like, if you're in love with the markets, you have to be a little crazy. The trader line guys don't actually talk too much like during the day about stocks. I do talk to Ross quite a bit because
Right.
he's managed so much money with the William O'Neill and
Yep.
Company fund. So he was like a great mentor along the way. But most recently, I've been talking to Ariel, Real
Yeah.
Simple Ariel.
Oh yeah. We've had him
Dude,
on
he's the
Yeah,
man.
like
He's
a lot.
one of
he's
my
awesome.
favorites. Yeah.
Yeah, I talk to him basically every day. He lives pretty close to my parents. So just one day I messaged him. I was like, hey, I'm going back to my parents' house. Like, if you would ever want to meet. And he did. And he's been such a great mentor for me
We had him
lately.
on for a
So,
workshop and I've talked to him a bit and I'd say I mean he's probably one of the best like group and theme traders I've ever had the pleasure of talking to. It's unbelievable.
yeah, he's a monster. So just like learning and like with him, he really taught me like how to size up, how to like focus on the themes. And that's why like right now I'm looking at these like the market's extended. There's no like true basis to really get like another extended move here. Maybe we just panic higher, sure, but like yeah, he's been really great. Like, okay, what's leading the market right now? What are you watching on pullbacks? Like we were both
What
looking at
can
that
take us
Nvidia
higher
trade.
from here too? That's the big one.
That's like
Yeah.
a quote, direct quote from him. Yeah,
Yeah. And
what's going to take us higher?
that guy remembers like the day and price he bought XLE at 3 years ago. It's insane.
Yep.
Like his memory is ridiculous when it comes to that stuff. He's awesome. Shout out Ariel. All right,
Yeah,
can I give the final
awesome.
question?
Yeah.
Sure.
So we brought this topic up today on Zoom. We talked about it for a little bit, and I wanted to ask you, now that the year's kind of coming to an end, what would you say is your biggest lesson you learned this year, trade in the market 2024?
Yeah,
I don't know, I'm
my
putting you on the
biggest,
spot, but off the top of your head.
yeah, I would say kind of twofold. Like leading stock, leading theme, that should be your main focus. Um, if you can get like, you have to find a way into those names. Jay on Twitter, PBA trader,
Yeah.
he is great at just like laser focusing on a couple names, leading stocks in the leading themes, and using kind of alternative entry points instead of just pivots. Like he'll use the downtrend line, undercut, and rally as an entry. And whenever that lines up with a gap zone and a key moving average, like that's another spot to get in on. So hammering home like theme, theme, theme. And then for me, like the big difference this year is buying those stocks at the price where everyone's selling them and then placing your stop. And you're going to look like an idiot on Twitter because everyone's saying, wow, Nvidia is so weak today. Wow, ALAB sucks. Like APP is breaking down. That's a stock that I bought today. Like
Nice.
APP 23% pullback, but it's the first test of the 20-day EMA, and we undercut the support gap.
Yeah.
I have to buy that stock. That's an A plus setup. I know the market's extended. I don't. What's going to take us higher? Who knows? But like, I'll take a 2% risk on this stock. It's a leader, and it's pulling back to the 20-day for the first time, and it aligns with the support gap.
Yeah, I don't know if you know
Lemonade.
J Money Stonks, but very similar mindset, I think, from him as
Yep.
well. He very similar. Like, yeah, you
Yeah.
got to find a way in. Yeah, 100%.
Yeah, I haven't talked to him like one on one, but I love the charts he posts. He's always on the themes too.
Yep.
He's coming on next Thursday.
Yep.
Next
And you
He has
Thursday.
guys
some. He
got some
has. He
great
had some.
guests.
Yeah. He had some good posts tonight too for everyone to check out later tonight as well.
Yes. Man, his charts are really beautiful. Man, he has a
Dude, he
way.
draws his lines so well so that nothing looks extended. It's insane.
I know. It's great. Um,
You could just, oh, we're not extended anymore.
yeah, no, well, honestly though, like Oliver Kell has tweeted about that or posted or talked about this before. Is instead of having it, your chart super extended from the bottom to the top, is if you notice on most of the charts he posts, is they are very compressed.
Yeah.
He's only using like a fifth or a fourth of his screen. And Bronco, you had talked about this a couple months ago, is how it's like a lot easier to see that wow, this is actually really tight, like in terms of the recent price action, when you kind of compress it like that. um any other lessons from this year, besides the most valuable lesson of leading stocks and leading themes? Anything else that really taught you good?
Yeah, I think just kind of ignoring what other people are doing and really focusing on like where you're at. If I'm having a bad week, like personally, I know I don't trade super well. Like last Thursday, when everything we had that like strong open, and then I gave back a ton of profit. I just took Friday off because I was like, all right, I just saw my account go down this amount. If I try to rush and make this money back, I'm regardless of what the market does. I know that that's going to open me up for a large drawdown. So kind of just monitoring yourself. And even if the market's in a clean uptrend, even if the leaders are acting well, if something's going on in your life and like that could be small, big, whatever, if you're not on your A game, it's okay to take a step back and not trade. Like if the market's going to be good enough to reward everyone, it's going to give you another entry point. So like you don't need to do things every single day. Just keep an eye out for when people are selling those leading names into those key spots, and you'll find another way back in. If you don't find another way back in, things are going parabolic, and then we're going to correct for many weeks and months, and then you're going to be completely fine that you kept your capital intact. But really kind of like limiting your drawdowns. If you can keep your drawdowns to like 15% max, I think that's like a good number. 10% is like you're doing great. 5% you're probably selling things too early and you're missing out on some quality gains. So I'm trying to get like better with saying, okay, 10% is like the right spot to be at on pullbacks, for like unrealized gains. But just listen to yourself. Like if you know you're not on top of your game, who cares what XYZ is doing on Twitter? Don't open Twitter that day. Just take a step back. The market will be there. And I'm saying that to myself so I don't make that same mistake
Same,
again.
same. Yeah, I mean, everyone in the group knows is, all the things that, we talk about if we have lessons or, talks midday or in the pre-market. These are not only things that, I think other people should learn, but I'm talking to myself. I'm always talking to myself about what needs to go on is like, as like that everything that we're trying to teach, everything that you're trying to teach right now to people is just reiterating the things you've learned and the things you want to learn more of and do more of. And that's something that has been invaluable for me through teaching and mentoring, and then through being taught and mentored myself is you know teaching the things you need to learn yourself
Yeah,
sometimes.
there's a reason I wasn't profitable until I started my YouTube channel. Like,
And I
even
love
though
that
like
you can do that.
I didn't have all the rules, I didn't have all the knowledge, but I was just like open with everyone, and I'm like, I'm going to make a bunch of mistakes, but I'm going to put this out there, try to learn as much as I can. So if you're struggling with consistency, I would just say like make some videos of yourself. You don't have to post it if you don't want to. You could post them as unlisted, but just like walk through your trades, say how you were feeling, and like a month later, watch it back and just try to get a little bit better every single month, every single cycle. And when things start to click, like this year was a clicking year for me. I'd never had triple digit returns until this year. Things can change very, very quickly. Like in the right market, when you're locked in and you're ready to take that next step as a trader, it'll all be worth it, like in 1 year. But you got to be able to like manage the downside. That's number one key. But then if this is for you, like don't give up because a year can change everything. 2023, when everyone was making money, I lost money. I was down 5%. So that was like a key moment in my life where I was like, all right, I need to change. I need to do something different. Let's take a step back. Let's learn about gaps, and that has changed my life. So if you're
Exactly.
struggling, just take ownership of it. It's okay to struggle. Everyone does, but struggle, take ownership of your system, and then just slow tweaks along the way. And when it does work, it'll work way quicker than you expect.
That's beautiful. And like that's why I ended up choosing my name or whatever on Twitter is TSDR. It stands for Tell, Show, Do, Review, which is like the most
Nice.
simple way of teaching and then learning, yourself. And it's just very simple 4 steps of yeah, learning. Um, yeah, man. Awesome session. The, uh, the folks listening are very grateful, and I look forward to the comments from the people that watch the recording as well. Um,
Yeah. If you guys have any follow up questions, you can either just DM me on Twitter or you can reach out with a list or something. I'll just answer them. Happy to help.
and hey, I'm gonna send you over a Discord invite if you want to ever want to hang out in here.
Sure.
Why not?
Thank you.
We talk about some good stuff every now and then. We'll goof around, but not too much.
Yeah. You have to a little bit. The market will make it go crazy.
That sure will. Thank you very much, Nick. I'm gonna go
Thank you,
ahead
Nick. That
and
was awesome.
end it. Oh, Bracco, you're the host.
Very good for your first interview.
Hey, thanks. I appreciate it.
Many more to come, I imagine.
Hopefully.